I really believe next spring is when we're going to see the boom kick in because rates didn't drop dramatically right now.
Good morning, guys. Welcome to Motivational Monday. My name is Matthew Hodge, Executive Vice President here at LPT Realty. I'm joined by Robert Palmer, Founder and CEO. Welcome, brother. Good morning.
What's up, man?
How are you?
Yeah, I'm doing great. We took Reagan down to Epic Universe. We took Reagan and Luna, but
Did you
Reagan
go?
wanted to go for her birthday because they have the How to Train Your Dragon.
Yes.
You know, I had the Toothless shirt on last week.
Yeah.
But, yeah, it was good. It was a good little time.
Yeah?
It's a good
Did
part.
you do like the VIP pass where you don't
We
have to,
didn't. We didn't. We planned it kind of last minute. We stayed at the little Helios Hotel or
Oh,
whatever.
cool.
We got the fast passes. It
Yeah.
was a good time.
Awesome, man. I got to go check that out. I'm not a big theme park person, but I do want to go check this out. All right. We are going to jump in today. We've got a lot to cover, so I'm just going to give you a quick rundown. One, we're going to do some quick brokerage updates. We're then going to go through the market report. I want to talk about all the data that we saw last week, what we're seeing with rates, maybe different than what people thought. And then we're going to go into the acquisition that we heard about this morning.
Yes, lots of
and
good
then
stuff
lastly, we're
going
going to
on.
talk about AI. So a lot to cover today. So real quick, let's start with our broker of the month.
Congratulations, Joanne.
All right,
our
Joanne
managing
Love.
broker in Florida for our broker of the month. Great job, Joanne. We have an amazing team of brokers across the country, and this month we are recognizing Joanne as our broker of the month.
Fantastic. Congratulations, Joanne. So congratulations, Joanne. Let's go ahead and switch over to market updates real quick. I know that we talked about over the last couple of weeks, you've been hinting that there was going to be a decision made in September. And actually, I'm going to play a clip from 3 weeks ago when you were still in Sailfish and you were talking about what could potentially happen as we saw, a quarter or a half point rate. You said, hey, guys, it's still uncertain. Don't gamble with the rate. Have your people locked now. So you kind of foreshadowed all these things.
And that was the best
happened.
time to lock, by the way.
Yeah, it was,
If
right?
you locked in before the Fed meeting, you won.
Yes.
Because we've actually seen rates get a little worse. Now,
Right.
not terrible. I'm still rocking the clean shave.
Yeah.
We're not back to the bad levels of rates we're at before. But I think a lot of people were expecting or hoping that when the Fed actually started cutting, we would see further improvement. We did not. We
Okay.
actually saw rates get worse. Thursday after the Fed meeting, all day Friday, and this morning, rates have gotten progressively worse.
Okay.
So
walk us through why that is happening.
Yeah, so like we talked about that in clips. So while there has been some news of inflation getting under control, it's still uncertain. And so again, the thing that bond investors hate more than anything, because again, the Fed is setting the short-term rates. So yes, the short-term rates came down by a quarter. The Fed cut by the quarter, but when that happened, long-term mortgage rates and the 10-year Treasury rates actually got worse. And that's because there's still fears about inflation. There's a couple of different things. There was actually something kind of bad for everyone that wants rates to go down in this Fed meeting. So there's the camp that says, hey, we think inflation is still a real risk. And so for them, the quarter-point cut is making that risk worse, right? Because as the short-term rates come down, that may spike inflation up. That's the first thing. The second kind of surprises that we saw come out of the Fed meeting. So number one, Jerome Powell, Jay Powell, the chairman of the Fed, he used this very interesting language to really just tell everybody he's not in a hurry. And so the quote was, "We're in no sprint to get to low interest rates." Now, when he said that, the market instantly got worse. Like mortgage rates literally spiked when he used those words. Like, we are not in a sprint to get to low rates. So what he's saying is we're going to take our time. So that was kind of our first not so great thing that came out of the Fed meeting. All right, the second thing that came out of it is there's this dot plot. And so the dot plot, the Fed started doing this coming out of COVID, where they do a chart and they draw dots on this little chart to show people where they think interest rates are going to be in the future. And some of them actually had rates going up on the dot plot. And so they was like a 4.4 up there for the 10-year yield, which is going the wrong way. All right, and so this dot plot moving in a wider dispersion. And so what it shows is they really don't know. They're more afraid of inflation than what we think is being led on. That's kind of the message behind the message. And then the third piece in support of that is the dissents. So dissent is when, so that the Fed as a group voted to lower rates by a quarter of a point. And whenever that vote happens, if some of the members of the Fed board don't agree with it, they can dissent. They can say, hey, I don't agree with that. It's like a dissenting vote in the Supreme Court. We go back to the July meeting, there were 2 dissents. So 2 of the Fed governors, all right, wanted a quarter point drop back in July. Okay, so they dissented. So in July, when the Fed said, hey, we're holding rates steady, two of them said, you know what, I disagree with this decision, Jerome Powell and the rest of my colleagues. I think we should be cutting a quarter point right now. This is all the way back in July. So now we get to the September meeting, and those two did not dissent. They agreed with the quarter point cut. So what that's telling us is if they had gotten their way back in July for a quarter point then, they would not have wanted another cut now. They didn't want a quarter and a quarter. They just wanted one quarter. They wanted it back in July, but they do not feel like we are bad enough to now get a second quarter point cut in September. So they were fine with it. Said, you know what? I disagreed with you, Jerome Powell, when you didn't cut back in July, but I agree with you now to only cut a quarter in September. Now, there was one dissenting vote. It's the newest member of the board. He was just appointed in September in the vacancy created by the retiring person confirmed by the Senate. Mirren is his last name. He dissented. He wanted a half a point cut. I think people really expected all three of them to dissent. I think they expected the two other Fed governors who wanted the quarter point cut back in July to want a half a point cut now. Because if they'd done a quarter then and a quarter now, that would have been the half.
Right.
But instead they're saying, you know what, we wanted a quarter then, but we didn't want more than just a quarter. And so that really, I think, surprised the market. So between Jerome Powell going out of his way to say, we're not in a sprint, we're not in a hurry, we're going to take our time with this, the dot plot chart getting wider, showing more uncertainty around inflation and where rates are going, and then the lack of those two additional critical dissents on the vote, that is what's pushing rates up. And so you've got the one camp that is saying, hey, even the quarter point cut may be too much to spark inflation. That's one investor camp. And then the other investor camp that was like, nope, we're not afraid of inflation. We want the Fed to cut as quickly as possible. They didn't get their good news either because the Fed is saying, nope, we're going to cut slow. We actually do agree with Jerome Powell. Like, there was this whole idea that if Jerome Powell was gone, the Fed would just start cutting like crazy. Well, the dissents don't reflect that anymore. The dissenting votes, only being one instead of the three expected, are saying that most of the board agrees with Jerome Powell, so getting him out of the way is not some silver bullet to cutting rates. And so the group that wants the Fed to cut to drive down mortgage rates didn't get their way. And the group that didn't want the Fed to cut at all because they're afraid of inflation didn't get their way. And so we did not see an additional improvement in rates. We actually saw a worsening of mortgage rates. So your customers who locked on Tuesday and Wednesday, taking our advice from Motivation Monday last week, got the lowest rates of the year. Folks who gambled into the Fed meeting got a worse rate on Thursday afternoon, Friday, or today. And we'll see where we go from here.
Oh, awesome. Thank you for that recap. So if our agents are hearing and trying to interpret what this means and how they should be guiding their consumers, what is it that you would say? Like, hey, do you just continue to not worry about the day-to-day fluctuations because it's still a great time to buy real estate? Like, where does that land us?
What we need to understand is the boom is going to be a little pushed out, right? Like, which really early next year I think is ideal. March, let's get through fall con, let's get through this year, let's keep doing the hard work, let's put ourselves in the best possible position as boomsday preppers. We now picked up 4 or 5 more months to prep, which I'm a fan of. You know, we've been patient this long. We've been dealing with high rates and low home sales for almost 4 years, 3.5 years. Like, let's not rush it now. Let's make sure we are ready. And so I'm actually kind of a fan of this because I really believe next spring is when we're going to see the boom kick in because rates didn't drop dramatically right now. And so, look, I think really it comes down to the same advice for your customers. If you need to move or buy or sell, now is a good time. There is inventory available. There's a little bit less competition. Rates are better than they have been. And remember, if rates do drop dramatically early next year, you can always refinance. The mortgage is the most powerful consumer option. You decide when you want to pay it off, when you want to refinance it, and the bank can never force you out of it. You can keep that low rate for as long as you want.
That's right.
And so people who locked in rates last week, if those rates get worse, they're protected. They're fine. If rates drop, they will refinance just like everybody else. So I think our consumers remain in a really good position. It's going to give us a little more time as an industry to ramp up and get ready for the boom that, again, I am predicting to be the biggest volume of boom, the sharpest change in annualized home sales that we will have experienced in our lifetime as we go from this 4 million baseline that we've been at long enough now to really set it. Like, we're talking about almost a 3-year average of 4 million.
Yeah.
We've never had that low baseline. To now shoot up back to 5.5 is going to feel like a rocket ship taking off.
Yeah.
So
Okay,
that's
looking forward to
what
that.
we are prepping for
All
here
right.
at LPT.
Awesome. Looking forward to that, and we're going to hear a lot more about that at FallCon and what you'll be doing to prepare for that period of time. So we'll get into that a little bit later on today. But I want to go to some breaking news. So we saw this morning that there was an acquisition that I don't think a lot of people saw it coming, but I think it validates what you've been talking about with the power of Aperture and LPT and those brands, kind of doing one, speaking to different customers, but two, different times of the years. One seems to heat up when the other one is feeling suppressed. So can you walk me through what that merger is and maybe what could be some complications with it?
Yeah, it's interesting, so obviously I'm a big fan of this idea of agent choice and, multiple comp plans, multiple brands, like providing opportunity for agents. There's the counter-cyclical nature. And the interesting thing is, like, we've been making this argument to a lot of Wall Street investors as we prepare for our future. And so it's interesting to see, Compass, who is the largest brokerage by volume, now acquiring Anywhere.
Yeah.
Right, and picking up a lot of other brands in the process. So this was announced this morning. I woke up to this at 7 a.m. As soon as I dropped Reagan off at school, got her to school right at 8 a.m. The drop-off window is 8 to 8:15, and we're usually that 8:09, 8:10 family. We were the 7:59 family this morning, so I could listen to the earnings call when they broadcasted it, or not the earnings call, but the combination call, the merger call at 8 a.m. this morning. So, but yeah, I think this is important for us to know. I mean, you have two of the largest brokerage platforms in the United States, combining. Compass is announcing it as an acquisition of Anywhere, all-stock deal. A couple of key points that we picked up from listening to it. So that the transaction combines Compass's brokerage with Anywhere's franchise operations. Remember, Anywhere sells franchises, which is a different type of model. Compass is going to assume $2.1 billion in Anywhere debt, plus $750 million in new debt that they're taking on from Morgan Stanley. So Compass is going deep in the debt hole to get this done. Compass aims to eliminate $225 million in Anywhere expenses annually. So there's going to be a lot of folks losing their jobs at Anywhere corporate, which is going to be interesting to watch. Investor call this morning, Refkin made this comment. They're now going to vigorously focus on paying down the new debt. So what I hear is a lot of the things they were focusing on before of innovation and other things they were doing, all of those resources are now going to go on paying down this $2.85 billion, almost $3 billion worth of new debt that they just put on their balance sheet. And then also really a lot of talk around mortgage and title. They were really, most of the investor call this morning was about mortgage and title and how now they believe that this combination is going to allow them to make a whole lot of money on mortgage and title, which, again, as a very successful mortgage guy, I can tell you why I think they're barking up the wrong tree. But anyway, it does set up this interesting dynamic where what we've been talking about and building with the combination of LPT and Aperture now looks a whole lot like Compass Anywhere.
Yeah, that's right.
The consolidated platforms. There are only two of us now. There's LPT Realty Aperture and there's Compass Anywhere. And they're the only platforms that are going to now, I think, really compete for what comes next. Obviously, I believe we have a massive advantage because we did it organically. We don't have the franchise layer. We don't have the almost $3 billion worth of debt hanging around out there. And so you can come back to us, Dave. While they are vigorously focused on retiring $3 billion worth of debt, we will continue to stay vigorously focused on innovation, agent experience, growth, our organic growth. I think there's just a lot of opportunities for us. So I'm very excited. I think that this merger, look, I'll tell you this, every person on Wall Street that I have a relationship with emailed me or texted me this morning, like, hey, this is great for you guys. Like, this is so exciting. I'm like, yes, I agree. This is very exciting. And so it validates the model. It validates this message that I've been talking about in meetings for the last 2 years about what we're building and why we're building it. And I think it even shows in a broader light why what we're building is so far superior. Yeah. And so it's like they had to do this to play catch up. and we're just building into it. And so while it's kind of weird to sit here as the little guy saying that they're having to catch up with us, but it is the reality.
Right.
Like, we are small and mighty and growing at a pace that no one has ever seen before. We are producing results that no one has ever seen before. And so how do the big guys compete with that? They can't come in and start from scratch. They have to do moves like this.
Right.
And so, again, really, really exciting day, I think, for us here at old LPTA. In the LPT Aperture world, with what's going on now across the street with this Compass Anywhere merger.
Yeah, awesome, man. Yeah, it's exciting because, to your point, it does validate, like, hey, this really is the path forward. This is what the future of real estate is going to look like, with these multiple brands serving different customers, having different offerings, maybe under one umbrella. But the problem with the way that they are approaching it is they have to retrofit these old legacy models and all this craziness to make it work. And then, to your point, like, as they're cutting cost, that's going to come from, talented people who are going to lose their jobs, and it's going to come from, not innovating and not investing in new technology for their agents, because they're going to have to pull all that cost down. And so we are the exact opposite. That's exactly what we are pouring into. And so it's going to be interesting to see where those two worlds meet. So
yeah, the other interesting thing, you look on the luxury space. Obviously, we're building out Aperture and having a lot of success there. But Christie's and Sotheby's are now under the same, like, Compass owns them both.
Right.
Like, that's a really weird dynamic. And again, but then there's franchise layers in the middle. So you've got these franchise owners who have been competing with Compass to retain luxury agents, are now owned by Compass.
Right.
So it's like, it's really bizarre, right?
Yeah.
Like, the person you've been competing against and having to change your tech and splits to try to keep up now owns you. And it's not like they're going to help you grow because they don't make as much money when a franchise does a deal. It's going to be really interesting to watch. I believe it's just going to be a massive distraction for everyone involved over on that side, which is good. It creates more opportunity for us. So I woke up very excited. Like I said, got Reagan to school at the earliest, at that 8 a.m. drop-off point, got on the call, came straight here. We've been already talking about strategy. A lot of folks that we are having conversations with in the Aperture world have reached out to Michael and I this morning, really excited about the opportunities this creates. A lot of folks from Wall Street reaching out to me about the opportunities it creates. So I think really good for us over here in the LPT camp. If you have a loved one or friend or someone you care about over in the Anywhere space, you may want to call and check on them this morning, because there are a lot of folks over there who are not really happy with this announcement. But that's where we sit. And again, whenever there's breaking news like this, we're going to bring it to you, because this is going to have an impact on our industry. We're going to see how this shakes out. You now have this massive consolidation of the most of the legacy franchises now being acquired by Compass, and we're going to see where that goes.
Yeah, awesome. Okay, all right. So we're going to kind of change gears into the last segment, talking about the preparation of what you believe could be coming in 4 to 5 months, into New Year, as we see the market start to shift. And so FallCon is going to be largely centered around those tools and saying, hey, here are the things that you need to be investing and being prepared for now. And we're going to talk about AI a little bit today and how that's changing, how are consumers finding agents already. Like, while we've always said, hey, it's not going to replace us, but it is going to change consumer behavior. How do you see that shaping up?
We've been focused a lot on how AI can help us be more, like, how we're going to use AI, right? Like, how are agents going to use AI? Big part of the certifications we're doing at FallCon, we've taken a different approach, where we're not going to try to build our own, what I would call, like, AI wrapper. I want to teach you how to use the foundational AI models directly, because that puts the most power in your hands. So we're going to be teaching you about how to use, OpenAI's ChatGPT and Anthropic and Google's Gemini, all of the big foundational models. There's 4 foundational models. Some of the other brokerages have tried to, like, insert their own little wrapper in the middle, where they just take your data and then put some stuff on it and send it over to the foundational models. We just want to teach you how to use the foundational models directly, until there's this bigger goal of, like, real estate super intelligence, but that's a conversation for another day. Until we can get there, we're not just going to build some dumb little wrapper, and so we're going to teach you how to use the models directly. So a lot of focus on how we should be using AI as agents and how we should be using the foundational models directly as agents. But one of the other pieces that I think is important that we haven't talked about as much, that came up on one of our speaker prep calls last week for FallCon, is how consumers are now starting to use AI. And one of those things they're using AI for is to find their agent. And so a lot of people now are using the chat bots, the foundational models. People are talking to ChatGPT. When you do a Google search now, you're increasingly seeing a Gemini AI response instead of the normal click-through. And so before, if you Googled, like, who's the best agent in Lake Mary, the first result would be either Google local service ads or it would be a Zillow link. And so you would click there, and that's how they would find you from your Zillow profile. Now, the AI is coming back and saying, well, we think that Matt Hodge is the best agent in that market.
I agree.
And so one of the big things we're going to dig into at FallCon, this is going to be a big focus on the Saturday session, is how to make sure you rank there. What are the things you should be doing right now to make sure that when a consumer asks the chat bot for a recommendation, that you are who is recommended? And so anyway, I thought it was really interesting. There was an article on Housing Wire about it last week. I'm seeing it more and more. I'm seeing it in my daily life. I'm seeing it in people I interact with. Consumer search behavior is probably what is going to be impacted by AI the most. And that is the thing we have no choice to get out of the way of. Like, whether you choose to adopt AI or not, I'm encouraging you to as an agent, but whether you choose to adopt AI or not, your consumers are adopting AI, which is going to change the way they find you and the way they do business in the future. It's going to potentially change the way home search works. And those are the impacts that we're going to really focus on Saturday of FallCon. So, the Thursday and Friday sessions around AI will be focused on how we use AI. And then Saturday, we're really, deep on how consumers are using AI and how we have to position ourselves with that. So just something I want to put out there. Be thinking about it. Be conscious of it. It is coming. Consumer search behavior is changing. It's like when we went from the phone book to Google, the next transition is Google to AI, and it's going to impact all of us.
That's right. That's right. Okay, excited to hear more about that. Definitely looking forward to FallCon.
So speaking of FallCon, there are 3 certifications that we are including for FallCon. These certifications are going to be sold next year through AIU for $2,500 a piece. We are including them with the $1,099 FallCon ticket. That's the in-person influencer series, the price point step up, and the AI Advantage. The AI Advantage is where we go deep on the 4 foundational models, prompts and tools you can use to win with AI, and then this session now we're going to do on Saturday about how to make sure you rank in AI. We are getting close. We are less than 30 days out, and so prices are increasing for FallCon. Monday, September 30th is the last chance to buy at the $1,099 price. If you buy after next Monday, it's going up to $1,399. So go ahead and get your ticket, lock it in. I think we only have like 100 or 125 tickets left. There's not a lot.
It's almost sold out.
FallCon is almost sold out.
Yeah.
So it is what it is. But again, we want you to lock it in before prices go up. We may not even be able to increase the price. It may just be sold out. And then the pay at close offer. So I did the deal where I put the $250,000 in there the first time. We depleted that. I put another $250,000 in there so that people could pay at closing with their tickets. The other thing is the hotel prices are going up too. The hotel price is going up from $239 to $289 a night. So again, guys, so if you're planning on attending, you can come back to us. I've had a lot of people tell me like, hey, I'm coming, Robert. I just keep procrastinating and I haven't got my ticket yet. Yeah, it's time. Lock it in. Like, the virtual option can't sell out. So I guess that's a good point. So if we sell out all the in-person tickets, the virtual tickets will stay available after next Monday. But again, I'm excited about this. It's going to be a great little event. I think we'll probably have, there's probably about 1,000 people who are going to get the certifications, and that's really kind of what we set this up for. And that's, I think, where we're going to sell out. We'll see if we hit a sellout or not. We're pretty close right now. About 1,000 people that we set up for the certifications. Again, really focused on the education side of it. It's going to be great. So we're hoping to see everybody that wants to get there coming up in October 15th or the 18th. And then, again, if you want to do the virtual, you basically just buy a FallCon ticket and you don't show up. And we'll get the virtual links out. You're going to be able to access that directly inside of Connect for anyone who bought a ticket and doesn't come in person.
That's right. Okay. Final thing I forgot to mention real quick. There was a Daily Wire article about you talking about the rates. I believe they quoted you. Forgot to mention this earlier. What was this about? I saw this and I forgot to ask you about it.
Yeah, so they called an interview about what's going on with mortgage rates. I think a lot of people were expecting rates to go down when the Fed cut, and they didn't. So, it's a cool article on the Weekly Dirt down in Miami.
Weekly Dirt. Okay, I said the Daily Wire.
It was Real Deal.
Real Deal, okay.
Real Deal's Weekly Dirt down in Miami. So, they interviewed me as an expert on mortgage rates.
All right.
And, again, pretty much just what I tell you guys here every Monday, but they got a little piece of it.
Yeah, they got a little tinge of it. Cool, awesome. Yeah. All right, so we are just about at time. Final kind of thoughts this week. We've got a lot of noise in the industry. We've got rates still kind of bouncing around. Of course, we got FallCon coming up. What are we thinking about going into the second half of this month?
Dude, prepping. Keep prepping, folks. The boom is coming. Again, I am happy that rates didn't just drop through the floor this week. Yeah. Like, it's an interesting time of year, like going into the holidays. So again, I think the best time for the boom is early next year. Give us this window to prep. This is the time that we get to do all the right things. We're going to be able to get all the knowledge from FallCon in your hands before the boom hits. In-person influencer, price point step up, AI advantage. Get all that into work through October, November, December, January. My hope is that we see rates drop in time for that spring buying season last year. That will be the boom. We are prepping for the boom. Ignore the noise. We want to keep you up to date on what's happening, and obviously two big industry brokerages merging is important to be aware of, but that's it. Put the noise aside, head down, focus on what you're focused on, help your consumers make great choices, help them find that dream home, help them sell, help them make the right choice, help them make the right decision. When is the time to sell? When is the time to buy? And keep them informed, because there are a lot of people sitting on the sidelines waiting for rates. There is so much pent-up demand right now. I'll tell you this, Mortgage News Daily, which is one of the websites that I like to keep an eye on for mortgage rates, it actually crashed after the Fed meeting. So many people wanted to go see what interest rates are doing that they crashed the company's website after the Fed meeting. There are millions of consumers right now just sitting there waiting for whatever number they have in their head when it comes to interest rates to sell their current home and buy a new home, or to stop renting and buy a new home. And we are going to unlock all of that supply from the sellers and all of that demand from the buyers and the sellers who become buyers when those magical rate numbers come on the screen, and they are coming. And again, a lot of people, they can afford the price, but they have a mental block against the rates, and they are just waiting, and they are watching, and they are crashing websites when they think they may get the news they want. And eventually all of that flood of activity is going to hit us, and that's what we are preparing for. We've been preparing for it from day one here at LPT. We launched this company for this purpose, to help you prepare for the boom that will come, and the boom is coming. Stay focused, head down, use the tools, help each other, take care of each other. We'll see you next week back on Motivation Monday.